Comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting it down to the closing bell. Here to help take us beyond the bell, it's a global simulcast with John Tucker, with Molly Smith in today for Tim Stenovic and Carol Master. Welcome to our audiences across our Bloomberg platforms here on a Monday afternoon. Hello to you too, John and Molly Smith.
Yeah,
she just called me a curmudgeon, by the way.
I did not. That was fully John setting me up to corroborate that he has long been a curmudgeon.
No, I accept that. I accept that criticism. It's just like, okay.
We've been struggling here a little bit this afternoon, confusing Cincinnati and Cleveland, but we're getting back on track.
Molly called it the Windy City, Cleveland. No!
Molly.
I know.
How dare you?
It's a tough day. It's Monday. It's Monday.
Okay. Yeah. Did you guys chat markets in there, or are you just talking about Cleveland and Cincinnati?
Some markets too. Yeah, why not? The Fed, CPI.
Nothing's going on.
No,
why not?
Good to be self-aware, John Tucker.
Oh, and we were also talking about the Golden Globes, Scarlett Fu, and you know what? They don't have a host for the shows, do they?
You know, I think they did away with that for a while. Yeah, I'm not clear on
how do you have an award show without hosts?
Well, how do you have an awards show which has come under so much pressure lately?
Well, hopefully they'll get their hosts together here. In fact, I mean, look, if they want anyone to watch this thing, you got to have somebody dangle someone out there. Anyway, we go back to the markets here as we are 30 seconds away from the closing bell. And we talk about 10 of the 11 S&P sectors solidly in the green. And we talk about a 6-week rally that may not have been the most phenomenal rally in the world, but it is 6 straight weeks of gains. And at least we're starting off here in week 7 on a higher note with 390 plus members of the S&P 500 in the green here on the day, despite the fact that we didn't get any help out of the Magnificent Seven today. And yes, this is actually what I think a lot of folks want to see. A Dow Jones Industrial Average going to close out the day higher by more than 150 points, or about 0.4%. A similar percentage move for the S&P 500, which is back above that 4,600 level. A NASDAQ Composite up about 29 points, or 0.2%. And the Russell 2000 participating as well, up about 0.2% on the day.
Yeah, a broadening out of the rally within the S&P 500, 390 stocks higher, 109 stocks lower. Let's just take a look at the sector performances here. You mentioned out of 11 industry groups, 10 are higher. If you break it down into 24, chip companies, consumer services, that's hotels and casino companies, and consumer durable and apparel are up by at least 1.4%. On the downside, autos, media, and telecom stocks are lower by at least 0.9%.
Yeah, let's take a look at some of the individual movers here. The biggest gainer in the S&P 500, that involves Cigna, and that was on the back of a report saying that the previous reports that Cigna would actually buy Humana, that deal is now off. We're told basically that they could not come to terms on a price. We should point out all of this is based on people familiar with the situation, and the companies haven't confirmed that the deal is off. They never even confirmed that a deal was on in the first place. Meanwhile, Macy's also moving higher here on the day, and that's on the back of what we're learning is of 2 private equity firms apparently in talk right now to take the company private. We're told that this actually has a lot more to do with Macy's real estate assets rather than the actual retail business itself. But this has been a long time in the making in terms of discussions about whether Macy's actually would move to sell. At least investors seem to think maybe there is some substance to this. Those shares up 19% here on the day. And take a look at FedEx. An interesting move in FedEx. The gains on the day relatively modest compared to what we're seeing on Macy's here. And actually, Macy's actually closing lower on the day here, moving lower down by about 0.3%. I'm pulling a Carol Massey here on the day. But let's see if my next mover has actually managed to stay in the green on the day. And that was Skyworks. Skyworks did finish in the day, up about 3% here on the day. That's a 10th straight day of gains for the Apple supplier. Longest daily win streak, Charlotte, going back to 1984.
All right, let's do a quick check of the decliners here. The biggest decliner in the S&P 500 was Paramount, giving back some of Friday's 12% surge on the back of reports that outside buyers are interested in buying the streamer. The New York Times reports that Shari Redstone is in talks to sell a controlling stake in National Amusements, the parent company, and has held talks with Skydance. You can see Paramount lower by 3.6%. Coinbase, and in fact, all of these crypto-related companies are declining as Bitcoin drops for a third day, falling below $42,000. We're talking Marathon Digital, MicroStrategy, Riot Platforms, all in the red at the moment. And the flip side to that Cigna story remain is Humana, down after Cigna walking away from those talks to acquire the company. Apparently, the gap between what Cigna was willing to pay and what Humana expected was too wide.
Yeah, absolutely. Here, interesting flip flop, and you see how investors are reacting to that. Let's take a look at the reaction that we saw in the yield space here on the day. Once again, most of the volatility was in treasuries, and most of it was on the shorter end of the curve with that Fed sensitive 2-year rate at one point hitting more than 4.77 on the day. But as you can see on your screen, it did manage to drop by the time we got to the close down back around that 471 level, as a lot of people now really focus in on a big data point tomorrow with CPI, and of course a big Fed decision, and more importantly, a big day for Fed communication on Wednesday afternoon.
Yeah, that's right. I mean, 471. Think about, I mean, what was it in October that we were up around the 5% level on the 10-year? So really a dramatic move down in these recent weeks as people are really just pricing in these more aggressive Fed cuts. Who knows? I mean, I think, Wednesday, but Powell's probably going to be really hesitant to really allude to the cut story, probably going to have to weave it in somehow. But then what do you do if are we still retaining that option to hike? It's kind of a lot to manage for him, John.
Yeah, I missed out on 5%, but I got to wonder, is 471, is that still a screaming buy at this point?
I don't know if it's screaming, but I mean, certainly better than where the 10-year was heading into all this.
Hey, one of the things we're going to take a deeper dive into coming up on radio, at least, the shale boom, it started with a land grab. That phase is pretty much over. So now if you want a seat at the table, you have to make an acquisition. So the street seems to be welcoming news that Occidental is buying a driller, Crown Rock. That's worth somewhere around $11 billion. And it looks like investors are applauding that one.
Yeah, go ahead, Scarlett.
No, I was just going to say, it feels like there's a big rush to get a lot of M&A done in the next week or so before people take off for the holidays. These are all deals that probably were in the making for weeks or months at a time. It's just interesting to see that the energy space has really exploded with all these transactions.
Yeah, well, I mean, they pretty much tapped out in the shale. So at this point, it is pretty much about consolidation. And think about how many deals we've seen in that space this year. And of course, Occidental has been one of the more acquisitive companies. So we'll see whether they can pull this off. We had this conversation earlier about this idea as to whether it was a good buy, and at least the consensus among our guests seemed to be that they think so. Guess what, guys? It's earnings season still, believe it or not. Oracle actually out with earnings right now. That's crossing the wire. I know you're excited for this, John. 2Q revenue coming in pretty much, Alexa, a little bit less than what the street was expecting. 12.9 billion. Street was looking for 13.05 for it, so a very modest miss. EPS, a very modest beat to the upside, 134 versus a street estimate of 133. And it's interesting too because the cloud revenue numbers that they're now breaking out as separate, they did actually show about 12% growth year over year on that basis. So the revenue did come in a little bit less than expectations, 4.8 on that 2Q cloud business when you exclude some metrics. The street was looking for 4.86.
And notably, Oracle also maintains its quarterly dividend at 40 cents a share. We know that in the last couple of months, it's been in kind of I would call it cost savings mode, some muted hiring, some pullback in marketing expenses as the cloud unit was a little bit slow for this past quarter. At least that was the indication given last time around.
Yeah, absolutely here. And it gets to this idea kind of when we start talking about business spending and that pillar of the economy. We were speaking with Ellen Zentner a little bit earlier, and she was really banging this drum about the consumer side of the economy and how there's enough evidence there that it'll hold up. And it gets back, I think, to one of the questions I can't remember if Scarlett or Molly you brought up, but about this idea of sort of what the Fed does next, whether a 4.7 is a screaming buy. Yeah, it's a screaming buy if you think that rates are going to come down. And Ellen Zentner seems to make it clear, at least in her view and in the House view, they're over at Morgan Stanley, we're going to see multiple rate cuts, and it's not going to be because of a recession. It's this idea that when you're following the Taylor rule and you're following some of those other metrics, as inflation comes down, you need to adjust restrictive policy in line with that. And that, in her view, is what those rate cuts are going to represent.
And that really is the majority of opinions right now. We just had a Bloomberg survey earlier this month as to why the Fed is going to cut rates. Nearly 3/4 of economists said it's just for that reason, and Romaine, that Zentner is in the camp of, that inflation is going to be easing and that's going to warrant a lower policy rate. But you've still got this minority camp of 28% or so of economists who say it's going to be due to recession. Our Bloomberg economics team being in that camp, but increasingly seems to really be a minority view out there.
Well, let me just ask you this, and pose this to you. And Scarlett, I want you to weigh in, because when we talk about a 5.5 Fed funds rate And you're now looking basically across the entire curve right now, well below 5 with a 10-year, all the way down to 4.2 and a 2-year at 4.7. Doesn't that tell you that a 5.5 is just too much?
Perhaps. It goes back to this interesting situation where Jay Powell praised the fact that financial conditions had tightened and maybe that suggested policy was restrictive enough. And as soon as he said that, of course, everything unwound. So have we gone too far in the unwinding direction? It seems like it's okay at the moment, but we'll have to see after CPI and on Wednesday.
All right, Fed Schmidt, Data Schmeda. It looks like in the Bloomberg MLI poll survey that the majority of investors see the S&P 500 hitting a record in 2024.
Well, we'll see if that plays out. That does it for our cross-platform coverage of the market close on Bloomberg Television, radio, and YouTube. And a reminder that Bloomberg Business Week is also on Bloomberg Originals. We'll be back with our radio colleagues tomorrow at the same time and same place with our global simulcast.